Hello, everyone. Good afternoon, good morning, good evening from wherever you're joining us. Thank you for being here today for this session. We'll wait for a few more minutes and then we'll start.
Okay.
Hello. Hello, good afternoon, Mr. Maroof.
Good afternoon.
We are still waiting for 1 or 2 more minutes to allow people to join, and then we will start our session.
Yeah.
May, if you could maybe put up the slide deck already, that'd be great.
Does it show, Jonathan? No? The slide?
Yes, perfect. Yes, thank you.
Okay, great.
Okay, I think with this, we can get started. It's 1 minute past the hour. Thank you, everyone, for joining us today. It's great to see so many of you, and thank you for your interest in this session on strengthening the linkages between disaster risk finance and adaptive social protection, why and how it matters. As you can see, this is a joint webinar organized by the Global Shield Secretariat, the Global Shield Financing Facility, and the World Food Programme. My name is Jonathan Auer, and I'm the moderator for today's session. So today we'll be talking about the topic of strengthening linkages between disaster risk finance and adaptive social protection, which is also the topic of a recent policy note published by GSFF, the Financing Facility, and World Food Programme under the thematic window of on DRF for ASP under the Global Shield Initiative. Before we start with welcome remarks, just a few housekeeping rules. Please keep your microphones muted throughout the presentations. You're very welcome to use the chat to introduce yourself and to ask questions to our speakers. We will collect all these questions and we will have a dedicated slot for Q&A and for an open discussion in the second half of the event. And with this, I would already like to hand over, without further ado, to Marika Brady, Director of the Global Shield Secretariat, for her welcome remarks.
Yeah, thank you so much, Jonathan. Thank you so much, Secretariat team, for organizing this together with the World Food Programme and the Global Shield Financing Facility. It is also wonderful to see so many colleagues here today in the call. I'm going to present some opening remarks and then also hand over to my co-organizers. So my name is Marika Brady. I am the new director at the Global Shield Secretariat at Frankfurt School, and happy to be here today. It's also my pleasure then to open this webinar on strengthening the linkages between disaster risk finance and adaptive social protection. And on behalf of the Global Shield Secretariat, really a big thank you for making the time to join us today and to be also active participants in the discussion, especially our Global Shield partner countries, our implementing partners, colleagues from across government, development, humanitarian and financial institutions. We know that we're meeting at a time when climate shocks are becoming more frequent, intense and costly. That floods, droughts and storms not only destroy the infrastructure and livelihoods, but they also push households deeper into poverty and food insecurity, really forcing people to make difficult choices such as selling productive assets and reducing meals or spending on health and education. And we also know that these impacts are not felt equally. Poor and vulnerable households are often among the least responsible for climate risk, but then among the most exposed to their consequences. And so this is why the question at the heart of today's webinar is therefore also so important. How can we ensure that finance arranged before disasters reaches the people who need it the most, quickly, predictably, and at scale? And what we see across Global Shield countries is that there's a growing demand for this work. 9 countries, Bangladesh, Fiji, Ghana, Madagascar, Malawi, Pakistan, Rwanda, Somalia, and the Gambia, have already included adaptive or shock responsive social protection in their requests for support. And their requests really cluster around 3 priority areas. First of all, scaling shock responsive social protection systems with pre-arranged disaster risk finance. Secondly, strengthening delivery systems, such as also registries and payment mechanisms. And third, connecting national disaster funds, livelihood protection, anticipatory action, post-shock recovery, and social protection into more cohesive frameworks at the country level. And we know that disaster risk finance helps government plan for disaster-related costs in advance, thereby using tools such as contingent credit, insurance, or other risk layers, risk retention on transfer instruments, so that money is available when it is needed. And then social protection systems can provide the channel to deliver assistance to the right people at the right time and in the right way. And therefore, linking disaster finance and adaptive social protection, it's not just a technical exercise. It is a practical pathway to more people-centered, timely, predictable, and inclusive crisis response. Strengthening this link requires investment in system preparedness, including early warning systems, scalable payment mechanisms, registries, and clear institutional coordination. But it also requires collaboration across governments, agencies, and civil society, as well as development and humanitarian partners and the private sector. So today's webinar brings together all these different experiences and best practices to really foster this peer learning and peer exchange, relying also on the practical insights. We will hear about the newly released Global Shield Financing Facility and World Food Programme Policy Note. And in addition, we're also honored to hear firsthand insight from country experiences in Malawi and in Bangladesh. So beyond these examples, the Global Shield is supporting adaptive social protection efforts across several of our countries, including the Gambia, Pakistan, and Fiji. And these engagements reflect then the growing country demand and the shared commitment to strengthen the link between disaster risk financing and social protection systems. So together, these efforts highlight why operationalizing this must be a priority. And that's what we will be exploring together today. So with that, I would also like to thank the GSFF, the World Food Programme, and the Secretariat team for preparing the webinar today. And in advance, thank the speakers, but also all of the participants to bring your valuable insights and experiences from the countries firsthand. And looking forward to the discussion today. So Jonathan, handing it back to you, and thank you so much.
Thank you very much, Marike, for setting the frame for today's discussion and laying out what we seek to achieve with this session, with this platform here. And with this, I would already like to hand over to Bianca Adam, Senior Financial Sector Specialist at the Global Shield Financing Facility. As you might know, the Global Shield Financing Facility is one of the 3 financing vehicles under the Global Shield. It is hosted by the World Bank. It's the primary vehicle to integrate projects, DRF-focused projects into ongoing World Bank programs, and it is also one of the lead agencies for the DRF for ASP programmatic window under the Global Shield. So Bianca, over to you.
Thank you, Jonathan. Thank you, Marike. So on behalf of the World Bank and the Global Shield Financing Facility, it's a real pleasure to be joining this webinar today and like Marike, to welcome all the representatives from Global Shield partner countries and the coordination hub implementing partners to this important discussion. As Jonathan mentioned, the GSFF is one of the financing vehicles of the Global Shield. It's hosted by the World Bank and embeds its support through World Bank country dialogues and engagements with the key objective of strengthening countries' financial preparedness for climate-related disasters, including, of course, through the global shielding country processes and by responding to the requests for support. The focus of today's discussion is a key to our agenda. Linking disaster risk finance and adaptive social protection is an area that over the years has increasingly become a priority in our work, in our support to client countries. And the reason for that is simple, and Marike alluded to some of this in her remarks. It's grounded in clear evidence. We know that globally, only a small fraction of crisis financing is arranged in advance of a shock. And of that, an even smaller share is formally linked to the delivery channels of social protection systems. In fact, we know that many of our partner countries don't yet have comprehensive risk financing strategy to enable timely and predictable scale-up of their social protection systems. This matters because the gap between financing reaching governments and that assistance then reaching households carries a real cost. We know that late responses are slower, they're more expensive than pre-arranged early responses. So to address this gap under the GSFF, we established a dedicated programmatic window, which we call the DRF for ASP window. It's implemented by the World Bank, WFP, and supports governments in building linkages between the DRF and ASP, or the money in and money out side of the equation. And to do this more systematically, using and leveraging national systems to the extent possible. Through this window, we are already supporting 6 of the Global Shield priority countries to advance this agenda. And our priority is simple. It's to ensure that disaster risk finance delivers maximum impact and that the protection that it enables reaches those who need it the most, the most vulnerable households who are most impacted. Looking ahead, we will continue to support the integration of adaptive social protection across ICPs and to develop the analytical and operational tools that countries need to do so, to strengthen capacity and coordination across the finance, social protection, and disaster risk management sectors, across within countries, but also within our own institution, because it's an important collaboration to continue to advance this agenda. The policy notes that you will hear about in a few minutes and that is being launched today sets out the rationale, the evidence, the practical building blocks for strengthening linkages between disaster risk finance and adaptive social protection. And we hope that this discussion is just the beginning and that we will continue discussing and pushing this agenda forward together. That we hope that this policy note, together with the meaningful progress that we are already seeing in country, will help advance this important work across all GS priority countries going forward. And finally, before closing, let me very briefly acknowledge key partners in this work, the GSFF donor partners, Canada, Germany, Japan, Luxembourg, and the United Kingdom, whose commitment and generous support make this work possible. So with that, I will close. Thank you very much. And let me hand back over to Jonathan. Thank you.
Thank you. Thank you very much, Bianca. And now I'm very happy to hand the word over to Mathieu Dubreuil, lead advisor for climate and disaster risk financing and insurance at the World Food Programme, which is, as you know, a substantial part and one of the lead agencies of the DRF for ASP window under the Global Shield. And of course, as an institution, brings a wealth of experience in, on the one hand, advancing financial protection for food insecure communities, but also supporting governments in strengthening their disaster risk financing strategies and approaches as a part of an overall approach to resilience building. So Mathieu, please, over to you.
Thanks a lot, Jonathan, and welcome everyone. I would say even more those who woke up very early or were staying late online. A lot has been already said by Bianca and Marika, so I will try to be quick, but I really wanted to thank you for joining the session and thanking the Global Shield Secretariat for helping us organizing and share experience and knowledge on this important topic. WFP is both mobilizing pre-arranged disaster risk financing instruments that enable earlier and more predictable responses, and in providing long-term support to government in strengthening national social protection systems around the globe. Linking pre-arranged disaster risk financing with adaptive social protection system combines WFP's technical and operational expertise on both topics. And through this window, the DRF4 ASP window, we're coordinating with our technical counterparts at the World Bank to ensure that these concepts are well represented in the Global Shield in-country processes in the first steps, but also in the actual implementation after. The key benefits and added value of the disaster risk financing instruments are undermined if we do not have the preparedness and delivery mechanisms established to channel support in the aftermath of climate shocks. And clearly, it's almost useless or counterproductive to only keep increasing the money in instruments if we don't have the delivery mechanisms, the money out instruments to deliver the response when this is needed. And this is absolutely critical, and this is the reason why we strongly believe in the window. Well-designed social protection systems can be a critical tool for helping families prepare for, absorb, and recover from climate disasters. And activated early, they protect lives and livelihoods before damage becomes irreversible. As the Global Shield against the climate risk strengthen coordination amongst partners and governments to scale up the use of DRF instruments, the DRF for ASP window will ensure that opportunities to strengthen these linkages and channel support to vulnerable people are not lost. I'm really looking forward to have the conversation here. I really wanted to also thank our donors, and because the main donor for this window comes from the GSFF, this is very simple because Bianca has already said everything. So Jonathan, back to you, and wishing everyone a great session.
Thank you, Mathieu. Yes, and I think with this we can jump right into the heart of the matter, the policy note on strengthening linkages between DRF and adaptive social protection, which is brought to us by two members of the technical team that developed the concept note, Emily Montier and Michael Good. So please, Emily and Michael, the floor is yours. Over to you.
Okay, I don't know if my screen is shared yet. I think I had to agree. Okay, there we go.
Mm-hmm. Okay.
Not yet.
We cannot see your screen yet, but it might take a few moments.
Oh.
Now we can see it.
Okay. Over to you, Emily.
Great, thank you. Hi, everyone. My name is Emily Montier. I'm a consultant with the World Bank DRF team, and I was one of the co-authors of this policy note. So if you go to the next slide, Michael, what I'm going to do is I'm just going to present a little bit of the rationale for linking disaster risk finance and adaptive social protection, summarizing what was in the policy note, and then I'll hand over to Michael, who will present more of the how elements in the note, how that is achieved. So first of all, I think we've heard quite a bit about this already, but effectively the overall aim presented in the note is that linking these two elements, DRF and ASP, is facilitated in order to ensure that disaster assistance will reach impacted people in an effective way. So as summarized in the note, we know that social protection systems have expanded significantly over the last decade. Many already reach very large numbers of climate vulnerable people. Adaptive social protection systems are ones that can play a role in supporting households before, during, and after shocks. So what this means is, for example, with targeted investments or design adjustments that Michael is going to talk us through, effectively, they can play a role in channeling assistance to affected households in complement with other forms of response, for example, through national disaster management agencies or humanitarian organizations or other. There are a number of enabling factors that allow social protection systems to be used in this way. And having effective financing strategies in place to enable timely scale-ups of assistance is one of those key enabling factors. But as Bianca mentioned earlier, the World Bank has conducted stress tests of social protection systems around the world and documented that often this financing element lags behind the other enabling factors that facilitate social protection systems to be adaptive and used in this way. So deploying disaster risk finance tools and risk-layered approaches can help in this respect by ensuring that resources are available when needed, avoiding reliance, for example, on budget reallocations or appeals processes that can be very slow, but equally avoiding the need for governments to tie up excessive resources in advance for events that may happen, for example, infrequently. So linking these two elements together, well-designed financing strategies and tools with effective disbursement channels is intended to improve the speed and predictability of responses and avoid, for example, households having to resort to negative coping strategies that can have long-term welfare and economic implications. That being said, it's important to note that the language in the policy note is also cautious. We know that this is still nascent in terms of the evidence behind these systems being in place. Not all social protection systems can be used in this way. Equally, not all disaster risk finance should flow through these kinds of systems, but really the message passes that there is untapped potential for this approach. That is really the message of the policy note. And the aim of the note is to facilitate better knowledge transfer, particularly on the aspects of system preparedness and capacities that need to be in place to allow these kinds of approaches to work. And on that note, I'll hand over to Michael, who's going to talk us through some of those bits.
Thank you, Emily. So yes, I'm going to be talking about what needs to be in place for this to work. As we've already heard from the previous speakers, we first have the money in component, where you're basically establishing risk-layered prearranged financing. And it's possible to use the analytical and diagnostic tools that support DRF instruments to help governments estimate the number of people affected and the cost of scaling up social assistance under different hazard scenarios. This can support decision-making on which of these instruments are best suited to meet the anticipated costs of a hazard. And it's also important that different types of DRF tools are relevant for disasters of varying intensity and frequency. So you can use multiple DRF instruments that provide more comprehensive coverage under a risk layered approach that combines both risk retention and risk transfer instruments. And it's important that these DRF instruments are designed and implemented in a way that explicitly provides resources for scaling up transfers through social protection, rather than financing infrastructure repairs or just filling government budget gaps after a shock. And then it's very important that for the money out component, you have a core social protection system in place that has sufficient coverage and flexibility. This is fundamental to ensure that these systems are ready to support vulnerable people. And then different components of these systems can then enable channeling temporary assistance to affected populations in anticipation of or during a crisis or disaster. And this can also include households that may or may not already be benefiting from non-disaster related social assistance. And another point is that it's critical that money out and money in are established in parallel, because it's the connection between the two that facilitates the timeliness, efficiency, and impact of the response to shocks. And then another key point of our joint policy note is that we need to invest in the system preparedness that creates the institutional and operational infrastructure that enables scalability in times of shock. There are several component parts that work together for social protection systems to be used as an effective channel for prearranged DRF. And we've organized these components into 5 categories, which include data and information, institutional arrangements, program delivery, financing, and cross-cutting monitoring and evaluation. And I will go into further details on this next slide, which includes a graphic that we've included in the joint policy note that is really trying to summarize these concepts into one visual. On the left side, we have the money in with risk-layered pre-arranged finance that includes different instruments such as contingency funds, contingency credit, or insurance that is suitable for low severity or high frequency events up to the high severity, low frequency events. And then on the right, we have the money out, which is being channeled through social protection to provide anticipatory action, early response, or relief and recovery. And then in the center, we have what is supporting or enabling all of this. There are 12 hexagons under the components of a well-prepared system, and these include under the data and information, we have information systems that help identify people and who qualifies for any support and what assistance they might need. And then you combine that with early warning systems that help detect hazards and prepare governments and people to act. And then triggers for scaling up that assistance that are based on historical data and risk models. And then we get to the institutional arrangements that are needed to ensure coordination and collaboration across government departments and external partners. We need to be able to build stakeholder capacity and understanding between disaster risk management and the social protection sectors. And we also need to integrate the policies and strategies of DRF and ASP so that they can strengthen institutional collaboration. The program delivery components include targeting criteria and processes to identify who is eligible for support, beneficiary enrollment mechanisms that can be regularly verified and updated, scalable payment mechanisms, and effective community feedback mechanisms. And then the financing components, which goes a little bit beyond the DRF, includes models that can help the costs of scaling up, that include the cost of scaling up assistance in response to different types of hazards, and designing financing strategies that identify from how and from where the resources will be channeled in advance and which money instruments will be used. And then we've also included in this a cross-cutting component on monitoring, evaluation, and learning to measure impact and identify areas for system improvements. And it's through this that we can ensure DRF is people-centered, and we have a framework for what is needed to strengthen the linkages between DRF and adaptive social protection. Thank you. Back to you, Jonathan.
Thank you very much, Michael and Emily for this presentation. I see we already have a question, some comments in the chat. Yes, please feel free to use the chat to introduce yourself and your area of work. We would now proceed directly to our case studies. We are very happy, very grateful to have two colleagues from Malawi and Bangladesh with us today to present some concrete case studies on how linking DRF and ASP can look in practice. May, if you could kindly put up the slide with the case study titles. Yes, so we will hear about the Enhanced Social Cash Transfer Program in Malawi. It is presented by Mr. Malda Mkutumula, a disastrous financing specialist and scalability coordinator at the National Local Government Finance Committee. And afterwards, we will hear a second case study on linking DRF and social protection under the Jamuna River Sustainable Management Project by Mr. Kamrul Maroof, Joint Secretary at the Financial Institutions Division in Bangladesh. As I mentioned at the beginning, please feel free to use the chat to share your questions with the presenters. We will take note of all the questions and we will then ask them later on in the open discussion. So, Malda, if you're here with us, please over to you.
Hello, can you hear me?
Yes, we can hear you well. Would you like to present your own slides or would you like us to present?
We'll present. Let me just.
Okay.
Get it. Just a minute. Can't find it. Okay. Let's see. Can you see my slide? No.
Not yet. Give us a minute.
No.
If you prefer, we'd also be happy to share the slides for you. We have them here. You just need to let us know when we should move on in the slide deck.
I don't know if you are able to see now.
Yes, perfect. Now we can see it.
I don't know. Here it's in the afternoon. The other side, good morning, good evening, good afternoon. So my name is Mudan Kutumura. I'm a specialist on DRF, and also I coordinate the scalable mechanism. So my presentation will be basically on linking disaster risk financing with social protection. I think Michael and the previous speakers have already mentioned a lot. So I'll just go straight to the point. So like for scalable mechanism, this is the story that we have that's our board. We look at both the triggers and so the targeting, and as Michael said, the targeting, when to trigger, and how much should we pay. So in this picture, what you are seeing is simply the when did we start monitoring, because ours mainly is based on the drought. Currently, we're focusing much on the drought. So when is the rain season starting? So if you look at the rain season in Malawi starts in November. So from 1st November, we start monitoring the patterns of the rainfall up to April. So we have two mechanisms. I'll discuss them as we are moving on. We have the area season and the full season. So if you look at the rain season, October to March, that's the agricultural period. Then in number two, we use both satellite data and also what we call evidence-based. This is when we feel like the satellite data is telling us that in that area there was a lot of rains, yet when you go on the ground, when we do ground truthing, we noted that there were dry spells in some patches of the districts. That's number three, that's evidence review. Then we have our own documents that we call the Scalable Handbook. The Scalable Handbook guide us as to who should do what, when to do that, and where and how. So it's more like our guidance. Then we took an insurance with the funds from the Global Shield facility, financing facility. We took an insurance with African risk capacity that was able to pay us on time. Then Mike also talked about the systems. We also use the e-payment, digital payments. So every time we are scaling up, we use the digital payments. So from the start in November, we make sure that by May or early June, we pay the beneficiaries. The reason why we target that area, as you can see, the rainy season ends in April, by 10th April. So in May, June, the prices for maize, which is the staple food in Malawi, they're always low because of the green harvest. So we feel that if we trigger the payout, let us pay when the people can be able to procure maize while the prices are still low. So when you look at the scalable, this is more like what it is all about, the objective, the delivery channel. So we have the social protection cash transfer program, so for and public works. So what we thought that as a scalable mechanism, just to complement these two, we don't have to develop a new wheel, but we are piggybacking on the delivery channel, which is the social cash transfer. So as I mentioned, we have two triggers. One is the full season. The other one is area index. Then, as I mentioned, we also looked at the evidence review. So this one, as I said, is that in one district, we noted that the satellite data is telling us that we have above normal rainfall. But when we go on the ground, there were dry spells. So what we do is to enable the people, those on the program, not to tend to negative coping mechanisms, we trigger the payout because sometimes it is a near miss.
Mulder, I'm very sorry to interrupt you, but
Yes.
it would be great if you could perhaps switch to the presentation mode. Then it might be easier for some of the participants to see your slides.
Oh, sorry. I thought I was on the...
No problem.
Is that okay?
Yes, now it is better. Thank you.
Yeah, thank you. Sorry for that. So at the end of the day, when we do that, we always write a report and the implementation report, which we share with all the stakeholders. These could be both the donor partners and also the government and the institutions that we're working on, and also the civil society organizations. So you may wonder, how do we select the districts? Currently, as I mentioned, we are in 8 districts. Our intention is that we move to the whole country, but because of the resources, we're in 8 districts. This is how we select the districts. One, it should be a drought risk district. Its vulnerability should be in terms of food security. Almost each and every year that district is affected in terms of food security. It can be both due to floods or due to drought. The poverty levels, and also as Michael said, and that the systems should be ready. Here we're looking at the delivery channels. For example, here we're looking at the service providers, the financial service providers. Also, we look at in that district, do we have enough data in terms of the social registry? And also, we will also look at the other interventions where we are looking at other institutions also operating in that district. So on other interventions, we're looking at, for example, if the WFP is there, iShare is there, and others, why can't we move to another district? Because at the end of the day, we'll be targeting the same people, the same communities. So it will be like double dipping, where we can take that program to another district so that we can help the ultra-poor and vulnerable people in so many districts. So the triggers, as I mentioned, these are the here, maybe you can see fully. Number one is a seasonal rainfall index from November to January, 31st January. If we trigger payout during this period, what happens is that we request funds from the ARC so that we can pay. Then from November 1st, that's the full season, from November 1st to 10th April, we still monitor. And if it triggers between that period, between those 2 months, between November and April, we'll also request the payments. So it's binary payments. So when we trigger in April, by May, June, we are supposed to make the payments. So the secondary trigger there is just a ground truthing, whereby, as I mentioned, if the first trigger did not trigger, we use that one. Now, in reality, what we do is that the insurance pays for the primary trigger based on the satellite data. So the secondary trigger is more of evidence, which we used for, we use the Department of Meteorological Services, and also we go to the districts and look at what has happened, and they gave us a report. Then we review the report, we review the evidence, then we put a recommendation that that district should be considered for a trigger payout. So what we have learned so far is that all the districts, when we started with the insurance in 2015 or 16, we had a national index. So we left out some of the districts. So what we have done so far is to give each and every district its own index. So for example, when you look at Blantyre there, if the rainfall that they have received in that agricultural season is below 45, the annual amount, that means it's recommended for a trigger. That's the early season. That's up to 31st January, from November 1st to 31st January. The full season is from 1st November to 10th April. So we look at if the rainfall is below 10% in the full season, that means it triggers for payment. So if a district triggers both, we only consider as one trigger. So you can trigger during the early season, or a district can trigger during the full season index. So this is just to give you an example. As I'm talking about, if you look at the index, one, so for Blantyre, it was around the index one is 45, but it showed us that Blantyre has received above 45, which was 56. So for index 1, Blantyre did not trigger. However, when you look at Blantyre in the index 2, trigger index 2, it's 25%. But when you look at full season drought, which is index 2 on top there, it's 21%, which means it triggered in the full season. So you can see some of the districts, like in Cheo, they are the first one, triggered in the first index, while the others, they triggered in the second index. So this is just to show you how we are using the data from the satellite to trigger a payout. Now, what are the parameters for scale up? So if you look at the picture on your right on top there, we have what we call the vertical expansion and the horizontal expansion. Now, the vertical expansion looks at only the beneficiaries who are on social cash transfers. The horizontal expansion considered some of the beneficiaries, for example, from public works. So the more people we add, the lesser the amount that the payout. The lesser the households, the beneficiaries, the more the payout. So that's just to give you a picture that we are using for the scalable mechanism. We only focus both on the social cash transfer beneficiaries and public works beneficiaries because it's easier for us to make the payouts. The reason is that we have the data already available for social cash transfer beneficiaries and public works beneficiaries. So instead of doing, it will not take us long to start collecting data, gathering data, doing the KYC for the digital payments, but these people are already in the system, so it's easier for us to do a payout, and it's quick. Now, the social cash transfer, the policy in Malawi is that out of the 20% of the vulnerability per district, it only focuses on 10%. So what we have done on this program is to take the social cash transfer beneficiaries, 10%, plus the 7% from the public works. So each district, we are reaching out to 17% of the ultra-poor households. Currently, the transfer value was around 50,000, which is around 24 or so, $24 per household, and the duration is for 3 months. So each month they're receiving 24 US dollars, 24 US dollars, 24 US dollars. I think it's around 24 or 28, somewhere there. So this is how we have designed our program to reach out to the affected communities.
Mulder, if I could ask you to please come to an end with your presentation because we're a little bit behind on time. Thank you.
All right. This is I was just explaining what I was explaining. These are the beneficiaries. I'll share the presentation. Then, so we have two insurance financing mechanisms. We have the insurance that is paid under the GRIF, that's the Global Shield Financing Facility, and also have the contingency finance from the World Bank. So the insurance, as I mentioned, is from the GRIF and is only for the first primary trigger. So what have we learned? Strong government ownership. That's most important because you are able to work with the government and also the donor partners. So the leadership is very, very vital. So this is the team that we have. Pre-established rules and financing help the speed up the response. This is whereby we're talking about the handbook. It has got all that pre-established rules and financing mechanisms. As Michael indicated, there is a need to invest in the delivery system. There is a need to invest in the delivery system because if we are not going to invest in the delivery system, then we are going to have the challenges in delivering to the affected communities on time. This is just for us, for procuring insurance. It requires time, so you need extra support from all sorts of avenues that you may need to help you to procure the insurance, because for us it was a challenge, but now it's easier for us to do that. As I mentioned, Global Shield Fund, a catalyst for change, that's the most vital. They paid for the premium and also system building and capacity building for the team. I think this is about going forward. We would like to reach all over the country, as I mentioned, nationwide. I think I should stop there. If there are questions, I can take from that.
Thank you. Thank you very much. That was extremely informative. And I see that we already have quite a few questions on different aspects that you mentioned in your presentation. I would kindly ask the participants to wait a little bit longer, and then we'll have time to answer your questions. But now I would like to hand over to Mr. Kamrul Maroof, like I said, Joint Secretary at the Financial Institutions Division in Bangladesh, for his case study on the Jamuna River Sustainable Management Project.
Hello, can you hear me?
Yes, we can hear you well.
Good afternoon from Dhaka. Here it's afternoon. And also for others, good morning. And so first, I'm Kamrul Maroof, and I work for the Ministry of Finance. And also I am currently working as the project director of the project, the Jamuna River Sustainable Management Project. And there is a component that is disaster risk financing. So today I'm going to make a presentation about the project. So I'd like to share. So would you kindly allow me to share?
Yes, please. Feel free to share your screen.
Okay.
If you could enlarge the presentation a bit, I think that would be helpful for some of our participants.
Okay, I'll do that. Okay.
Yes, perfect. Thank you.
Yeah, thank you. So it's the Jamuna River Sustainable Management Project. So this project has, in fact, three components. Component 1 and 2 is about the building some kind of infrastructure in the Jamuna River basin area, and the component 3, which I'm going to talk about today, that is the disaster risk financing component. So first, I'd like to share with you about the disasters in Bangladesh. Because you know, the disaster is a very common thing in Bangladesh. If we look at the disaster record, you will see that the common type of disaster is flood and cyclone. And every year, generally we have floods, big or smaller type of flood. And on an average, there is a loss of $2.2 billion per year only for flood. That's the average type of flood. Then we also have in the southern part of Bangladesh, we have the Bay of Bengal. And frequently every year or every 2 years, we face the big cyclone. For example, we had cyclone Aila that replaced around 500,000 people in 2007. and approximately that affected 50,000 families. And there was also another big cyclone in 2007, that is Cyclone Cedar, and which caused around 3,500 human life, and also the other fatalities were there. On average, the government has allocation from its budget. So average in every year, we have to spend around $800 million for post-disaster intervention. So what are the different types of disasters? We have different types of disasters like drought, earthquake, then flood, and also storm. And if we look that there are different types of flood, like flash flood. And if we see from 2000 to 2023, in these 24 years, there were 9 different flash floods causing around a damage of $800,000, $850 million. Then there is a general flood, which caused around average every year $1.7 billion. And also there is a river erosion, and because of this riverine flood, around $4.1 billion, that is the loss. And as I mentioned, the storm is another big disaster for Bangladesh. So if we look that there is the tropical cyclone, there were around 31 cyclones, some big, very big, and some are not that big. So the average loss was $6.6 billion for these cyclone, and the 27 million people were affected for these 31 cyclone events. So that will give you an idea how disasters affected our life in Bangladesh. And if we look at the cost of these disasters, the cost of recovery, rehabilitation, and reconstruction, you see that there are different types of disasters, like some are 2 years, every 2 years. There are some normal disasters. Then we have 5 years event, then 10 years. So for 2 years event, we have around $4.7 billion, $4.8 billion. That is the cost that we bear for the recovery, rehabilitation, and reconstruction. Then for 5 years event, it's around $10 billion we need for the recovery, rehabilitation, and reconstruction activities. If it's a little bit bigger, then if it's 10 years event, then we need some around $13 billion. And if it's very big, like a 50 years event, that would cost around $20 billion. So that's the disaster fund we need to cover the disasters. And so what we have right now, what is the capacity or what is the gap? At the moment, the allocation we have from the government sources, we see that we can cover the 2 years event. For 2 years event, you see that we need around $4.8 billion. And there are different types of, say, emergency response, then rehabilitation activities and reconstruction activities. For these, we need around $4.8 billion. And for this 2 years event, the budget, the allocation we have from the government, that is enough. But if it's 5 years event, then I think we need around $9 billion. But we have around $5 billion. So there is a gap of $4 billion for a 5 years event. And if it's bigger, little bit bigger, say if it's 10 years event, then we need around $13 billion. But we have only little bit more than $7 billion. So there is a financing gap of around $7 billion for a 10 years event. If it's big, like 50 years event, then you see that we need around $20 billion, but we have only around $8 billion. So there is a gap of around $12 billion. So that gives us an idea that we have big financing gap for a much bigger disasters that we have to consider, we have to plan so that we can manage this kind of disasters effectively so that we can finance those disasters. So what we have done in Bangladesh government has prepared a DRF strategy last year. So this strategy spells out what are the strategy we had. So broadly, I can say that there are 6 different strategies that we are prioritizing, we are focusing on. like we want to enhance and strengthen our fiscal buffers. Then we want to strengthen the efficacy of the social assistance program. We have the social assistance program right now, not in that big scale, but we have. So we want to strengthen those programs. Then we want to foster greater risk transfer, and we want to involve the private sector in this mechanism. Then we also want to strengthen the institutional framework for DRF, and also the risk reduction for our long-term resilience. So these are the strategies that we are focusing on in our DRF strategy. Particularly the project where I am working right now, that focuses on the efficacy of the social assistance program. So as part of this social assistance program, what we are doing, the government is doing, that is, we are focusing on integrating the management information system, also optimizing the scalable social program, building our hazard vulnerability map. Then for the cash transfer, we are focusing on digital cash transfer program. And also the monitoring, we want to strengthen the monitoring and evaluation framework. And also there are, that there are different ministries that are involved with these DRF. So what we need, let's say we have the Ministry of Finance, then we have Ministry of Disaster Management, then local government. So all these ministries have their role for this disaster management and their financing. So we need some kind of interministerial collaboration. So this strategy focuses on how we can develop the better collaboration and coordination between these ministries so that we can manage these disasters effectively. So now I will come to the project that we are working right on. That is the Jamuna River Sustainable Management Project, Component 3, which is disaster risk financing. In fact, I have also with me our DRF specialist, Mr. Shumon Hassanul Islam. Mr. Shumon, are you here with us?
Yes, I'm here.
Hello, so if you want, you can also contribute, because he's also working in the technical issues of this project. So he will contribute if he wants. He can also contribute. So
Thank you very much. Yeah. Yes, if I may kindly ask you to please keep your presentation very short so that we have enough space for discussion afterwards. But we'd be very interested to hear, of course, about the project itself.
Okay, so what is the goal of this project? We want to protect the people that are affected by these floods in the Jamuna River area. That is the northern part of our country. We have the Jamuna is a river. So in this river, we face these flood almost every 2 or 3 years. We have this flood. So when they are affected, their homes are underwater, so they cannot go to the work. So they need some kind of support. So this project is being implemented by the Insurance Development and Regulatory Authority, which is under the Ministry of Finance of the Government of Bangladesh. And we are also supported by the Global Risk Financing Facility and also World Bank. We are working with the partnership of World Bank and Global Shield. So if you do what mechanism we are using for this project? Right now we have the fund for this project around $6 million. So what we will do, we will use a portion of the fund as insurance premium. So from the government side, we have the fund allocated for this project. We will use the fund from our project side, and we have an insurance mechanism with a local insurance company that is called Sadharan Bima Corporation. That is a state-owned insurance company, and the policyholder is the government body, that is Insurance Development and Regulatory Authority. So we have these policy insurance contract. In fact, we have started these insurance first year. This year we have already have these insurance contract with SBC. The policy is in force. The period that we are covering is from the 1st June to 30th September. From June to September, that is the monsoon. During this period, this 4-month period, we have these flood generally. So we will cover the people of those areas affected for these 4 months. And we have in fact, for this project, we have two different options. Like one is the insurance. Then we also have, there is another fund for the community protection fund. We call it community protection fund. So those who are not getting support from insurance, they will get support from these community protection fund. So there are two different, one we call the CRI, and also another one is we call community protection fund. So because this is a kind of parametric insurance, so if the flood hits the trigger, if the flood hits the trigger, then those areas where it hits the trigger, they will get the support from the insurance company. And where the trigger doesn't hit, then they will get, maybe they're affected, so they will get support from these community protection fund. And at the field level, we have our delivery partner, World Food Program, is working with us at the field level, because in fact, under this project, we are supporting 100,000 beneficiaries in the Jamuna River area. So for selection of these 100,000 beneficiaries, we are taking support from World Bank. And we have, if we look at how we are implementing this project, we have 4 different partners. As I already mentioned, the World Food Program is helping us at the field level, identifying the beneficiaries, then the beneficiary registration, and also their stakeholder engagement, because those who are in the affected areas, they are very poor people. They don't have clear idea about these insurance, particularly the parametric insurance. So we need to aware them about the mechanism of this insurance. So we have the World Food Program with us. They will help us with this kind of engagement. They will have some kind of meeting with these beneficiaries, small group meeting, so that they can inform them that they're getting, what kind of support they are getting, and when they will get the support, and how the trigger mechanism works. All these things that will be the beneficiaries, they will be aware by World Food Program. Then we have our another partner, that is the WRMS, Weather Risk Management Services. What they did, they have designed these insurance product. And another partner is our, we call it calculating agent, that is a local agency that is Institute of Water Modeling, having joint venture with Weather Risk Management Services. They're working with us as the calculating agent. What they will do, they will monitor the trigger, whether the trigger is, whether there is the water level or the flood level is hitting the trigger. We're getting this information from these IWM, that is the calculating agent. And also the last one is the insurer, that is the Sadharan Bima Corporation. They are the insurer of this climate risk insurance. So as I have already mentioned, that the World Food Program is preparing the list of the beneficiaries. It's around 100,000 beneficiaries. So how they selected these beneficiaries? So what they have done is, there were 2 different criteria they used to identify the beneficiaries. That is, we call it physical indicators. And then there are some social indicators, like the physical indicators, like the areas flooded, or the flood depth, or the buffer zone, and the slope, the drainage density, how quickly the water passes. So these are the physical indicators they used to identify the beneficiaries. And they also use some kind of social indicators, like say the female-headed households, the vulnerability, then the agricultural population, then the house condition, and then the age of the population. These are the social indicators, or the percentage of poor population. They have used these as social indicators. So combining these social indicators and the physical indicators, they have identified these 100,000 beneficiaries. First, what they did, they have identified in Bangladesh. In fact, we have the local government at the first. We have 64 districts, and each district there are some upajilas, and in each upajilas there are 148. There are some union parishad. So for this project, we have the 3 districts where we are running this project. So we are covering the flood of 3 districts. And in these 3 districts, only 19 upajilas we are covering. And out of these 19 upajilas, we have selected 148 union parishad that are affected by flood. So our project area is right now 148 union parishad, where we have identified 100,000 beneficiaries with the help of World Food Program. So that is how we have selected the beneficiaries for this project. So now the trigger design. So how we design the product when they are the people they are affected by flood will be getting the benefits. So we have selected the trigger, analyzing the water level. We have Bangladesh Water Development Board, so they have the data. So we have used the data from 2000, last 25 years data we have used to identify to calculate the trigger. There are some water stations where the water level is measured. We have identified 24 water stations in the Jomuna River area. So we will use some water stations as primary and some water station as secondary. We will use as the water level and the flood extent. What percentage of the area is covered? These two will be used as the trigger. So once this water level and the flood extent hits the trigger, then the beneficiaries will get the insurance payout. And what we are doing, we are covering, as I already mentioned, that the 3 districts we have covered. So from these 3 districts, we have identified 100,000, more than 100,000 beneficiaries. So from Gaibandha, we have identified 39,000 beneficiaries. From Kurigram, another districts, 40,000, and Sirajganj, 32,000. So for these years, we are covering only 3 districts and 100,000 beneficiaries. So
Mr. Maruf, I'm very sorry to cut you short here, but I think we need to come to an end for your presentation because we have quite a few questions in our chat. I would like to thank you so much for your presentation, and I'm sure that we'd be very, very happy to learn more about your projects. Maybe if that's fine by you, we would also share the slides with the participants. But perhaps now open the space for a few questions. And there is actually one specific question directed to you, if I may bring that in, which is regarding the insurance policy. Now, in one of the previous slides, you showed the actors involved and how they work together. So the question is, who buys the insurance policy? Is it taken out directly by the recipients? Or is it the government that provides a grant or, for example, a subsidy for the policies? Thank you.
Yeah, it's the government, because it's a pilot project. So right now the government is the policyholder. So government is paying the insurance premium as subsidy. And
thank you very much.
The Insurance Development and Regulatory Authority is the policyholder on behalf of the government. Thank you.
I'm sure we'll have some more questions directed at you in shortly. But now I would like to perhaps summarize a few of the interventions that we've received in the chat. So maybe to start, we had one question that was directed to our 2 case studies regarding the key challenges that you faced in setting up your projects. And here the question was specifically on intergovernmental collaboration. And perhaps I would direct that question to Mulder from Malawi. Maybe you can share some of the key challenges that you've faced in your project.
Thanks. Indeed, we had some challenges in setting up the project. The number one, as I mentioned, was on procuring the insurance. The challenge was that the regulations in Malawi in terms of procurement against the World Bank regulations were on neck to neck. That is to say, we were supposed to go through the Reserve Bank and require the waiver for us to procure from outside the country. The reason why we opted to procure from outside the country was because of the risks and the challenges in terms of local, by then the local insurance companies were not doing a lot in terms of the, I can say, weather premiums, climate premiums, climate insurance. So we had to go to and fro, back and forth with the Reserve Bank of Malawi because they were saying we are externalizing the forex. So after some time, it's when we come up together with them during the Disaster Risk Financing Strategy Committee working group. That's when we discussed to further. So that one also delayed the procurement of the insurance. As for the inter-ministry collaboration, I think what we did as a team is to look at who are the crucial collaborators. So, for example, when you look at because we use the satellite data, we included the METI department to be part and parcel because that's a key. Then we also included the Minister of Finance, Minister of Agriculture, because we're looking at the food, and also incorporated the Department of Disaster Management Affairs because they have the mandate to coordinate the disasters. So at first, because we were just starting in 2020, we had some challenges for the principals, that's the bosses, to give us the names of the officers to participate. But nowadays, now it's so easier for us because they have seen the end results where we are with the scalable mechanism. So for us, I think those were the main challenges. In terms of other institutions, donor partners, I think we are working well in terms of collaboration. Things are going on well. Over.
Thank you. Thank you very much for sharing these insights. And there was a follow-up question on the insurance provider in your case. And I believe from your presentation, the insurance provider is ARC. Can you confirm that?
Yeah, the insurance provider is ARC, African Risk Capacity. ARC.
Okay. I see. Thank you. I also see that there are a few questions related to Mr. Maroof and the team in Bangladesh regarding the question whether you have tried enticing beneficiaries to pay for the premiums at least partially, and if there are some considerations regarding the project sustainability once the pilot is over. I can also see that Mr. Islam has his hand raised, so perhaps you want to respond to these questions from the audience.
Thank you very much. With the referring Mr. Murphy, am I audible?
Yes, you're audible.
Yeah. So with the reference of Mr. Maruf's presentation, I first respond to the risk and the challenges that we are facing. So yes, one of the participants commented on the basis risk about this CPF, Community Protection Fund. Yes, there is always a mismatch between the parametric trigger and the ground reality. So and to match those things as a backup, we are keeping this CPF as a flexible funding with the ground truth, ground reality assessment. Whether we'll be using this CPF, this community protection fund. The mechanism is like if the insurance is not payable, then we'll be looking at the actual ground situation with the parametric analysis, and those CPF, this community fund, will be released to the people through this mobile money transfer things. And alongside, we are also working on remodeling and refinement of the modeling algorithms, continued back testing and the historic data, and also checking with the ground information. Our calculating agent, IW, International Water Institute for Water Modeling, they will be working on this as a process of continued improvement of the modeling. The second challenge we face is the data reliability. All our trigger data are the public data as provided by the Bangladesh Flood Forecast and Early Warning Center. So we are depending on their data set. So if they fail providing those data regularly, obviously that's a risk which we don't control, but again, its impact on both our decision making. And finally, the institutional capacity. Well, the whole idea of DRF is a new concept. So understanding of various stakeholders, particularly decision makers, are varies. Some people are also see the whole process as they're negatively because they are getting benefit from the conventional way of a disaster response and a social safety net. The second question was, if you please tell me again, what is the second question?
Mm-hmm. I think there was a second question regarding the sustainability and the strategies leveraged to solicit. No, apologies. That was another question. The question was regarding the sustainability of the project, and if there are considerations to phase out the premium subsidies gradually.
Well, that's the common question always people ask about. Well, this is the project we are targeting the most vulnerable and marginalized people. If those insurances or the CPF not go out to them, it will be gone through, they will be coming under the relief, regular conventional relief and rehabilitation program of Bangladesh government. And secondly, this is a macro level insurance program where the governments themselves taking this insurance policy holder and giving the social safety during the disaster or after the disaster to the most eligible and vulnerable people on the ground. So yes, this is a pilot project we are doing, and this can go in many ways. We have a plan of continued lesson learning and knowledge development. So in the next phase over the next years, it could go in many ways. This can go to the market. People, we are identifying unions and measuring their risk and the premium and everything. So there are the people who are well off, but again wanted to take the insurance for their household. They can take it from the market. These are the options. The other thing, government can mainstream it within the disaster response system. So that can be second idea of sustainability. And finally, this is the market system and the funding from the local government also can. The central government or the local government can ensure their own jurisdiction with those calculation and methods. So there are many ways this can go as a sustainability, and we are piloting this and continued knowledge development and analyzing and sharing with the people.
Thank you very much for sharing these experiences on
I have one comment. So if you allow me first, yeah. So about the very first presentation on the policy issues, I think one thing that from Malawi colleague also mentioned, and from our experience, is very important is the leadership. And I also see some comment from our Pakistani participant here. This government is reluctant for offering funding for those kind of action. Political and technical leadership to take these new ideas and new experiences forward and doing mainstreaming is very important. So in the policy statement, it seems very much on the system information and the mechanism, but individual human is also important, particularly countries like Bangladesh, Malawi, or Pakistan. So I think the policy paper that been presented here could consider this individual leadership of particular taking this forward in various level, particularly this political leadership from the local government and also from the national government level. Thank you.
Thank you. Thank you very much for sharing these insights also on the importance of government leadership. Unfortunately, we are slowly running out of time for this event, and I can see there are many more questions in the chat. Very sorry that we could not address all of them, but I would like to still give the floor to perhaps one intervention or one comment from the audience on the case studies presented, or perhaps if there is an experience from your own country that you would like to share very briefly with us in just a few minutes before we wrap up this call. Yes, I see Isatu. Please come in.
Thank you so much, Jonathan, and good afternoon, everyone. From the outset, I think I would thank the organizers for the very insightful presentation, and also extend my appreciation to Malawi and Bangladesh really for the excellent case studies. The case studies really strongly resonates with our national context. I am sorry, I've not introduced myself. I am Aissatou Kamara from the Gambia, working with the Ministry of Finance and Economic Affairs. So the case studies, I would say, really strongly resonates with our national context. The experience presented really highly relevant to the Gambia as well, particularly the issue of mismatch between satellite-based information and what is actually happening on the ground. I would say this has been a critical challenge for the Gambia in the context of payouts triggered under the Africa Risk Capacity Risk Pool. The steps that the Bangladesh colleague has just offered, I think it's very important lessons for the Gambia to consider in addressing this challenge, particularly in strengthening the accuracy of data inputs, improving ground truthing mechanisms, which is very important as well, and enhancing the modeling software used to generate and validate triggers. So on the use of DRF instruments or mechanisms and social protection systems in the Gambia, I would say we are still in an early stage of fully operationalizing DRF instruments linked to ASP. However, I'm happy to note that we have established very important building blocks which are already in place and continue emerging. And for example, a very important one is the establishment of a national social registry with nationwide coverage. And in the Gambia, when it comes to coordination, it is not very much strong as we would anticipate, but I would say there is increasing coordination among key institutions, which includes the Ministry of Finance and Economic Affairs, the National Disaster Management Agency, and the National Social Protection Agency, which is very important. And we are also actively using a range of disaster risk finance instruments The parametric instrument that has been mentioned by Malawi and Bangladesh, it's in use in the Gambia as well. We are using the catastrophic deferred drawdown option from the World Bank. Recently, we've signed a financing agreement with the World Bank to use the contingency emergency response program under the World Bank. In addition as well, we are exploring the establishment of an adaptive social protection window to further strengthen the linkage between financing and delivery systems, which we believe would enhance our ability to respond more effectively and rapidly to climate-related shocks. However, I would conclude by saying there are still clear areas that we require strengthening as well, despite these key reforms that we've undertaken. And this includes really improving data integration between social registries and disaster response systems. This is quite important, as well as enhancing the scalability of existing social protection programs during large-scale shocks, but also strengthening pre-arranged financing instruments and embedding them more firmly within ASP system remains a key priority. And we are hoping that the upcoming disaster risk financing strategy that we are currently developing, we expect would provide a more structured and coherent framework to guide these reforms and strengthen our overall responsive mechanism in the country. I'll stop here and really thank you for this opportunity, and really thank Malawi and Bangladesh for these case studies. They are very important, and I think Gambia could learn a lot from their experience. Thank you. Over to you, Jonathan.
Thank you very much, Aissatou, for your input and for raising these additional important aspects. I feel like we've covered a lot of ground today, from trigger design to the importance of interagency collaboration and sustainability considerations. I see there are still a few hands up. However, we've unfortunately almost reached the end of our session today. Therefore, I would encourage you to please put your questions or comments in the chat. We will make note of all of them, and I'm sure that there will be more opportunities coming up in the future to further discuss this topic. But now for the closing remarks, I would like to hand over to our colleague from the World Bank, Mr. Felix Long. If you're in the call, please do share a few closing remarks and to wrap up the discussion for today.
Yes, thank you very much. And thank you very much to the speakers, the organizers, and everyone who's contributed to the discussion. I think it's been an excellent discussion. And I think there have been some really insightful experiences shared. So it's really great to see this. I think today has really kind of reinforced the message of this policy note, of the joint policy note that has been written. If we want faster, more predictable responses to climate shocks, we really need to strengthen the connection between DRF and adaptive social protection. And in fact, I think in many ways, we're actually now getting beyond the proof of concept stage. The debate is really shifting increasingly from the why are we doing this to the how should we do it. And I think we see that there are still, in many countries, there are still challenges. And I think some of the challenges have been mentioned today. But I think there are various reasons for this, why it's still challenging in many contexts, many of which are technical. And I think it's a lot of the technical challenges have been alluded to today. And it's actually quite tempting to only focus on the technical issues because there are so many. If we think about the robust trigger design, dynamic social registries, ensuring data availability, scalable payment systems, structuring financing instruments, all of these things are obviously very, very complex. But I would actually like to highlight maybe another challenge that from our experience, from my personal experience working with many countries on the linkages between ASP and disaster risk finance is just as important. and that has also been alluded to a couple of times today, which is the collaboration across sectors. This agenda is inherently multi-sectoral. It brings together, obviously, social protection, fiscal risk management, disaster risk management, the design of early warning system, food security systems, and others. And creating this linkage between these various sectors can be very, very difficult. And we actually see in many countries there are still disconnects. So sometimes we don't see social protection formally recognized as a disaster response instrument. There are debates, for example, across response modalities, in kind or cash. Disaster response is not always integrated into fiscal risk planning. So creating these linkages is really key. And in our experience, creating these linkages from the start is really one key first step and a key success factor for these programs as we go forward. I think both country examples that we've heard today illustrate this really well. I think both Malawi and Bangladesh have worked and demonstrated very clearly how they have worked across sectors in order to create these lasting connections. But actually, we see this also in many other countries. So Aissatou just came in. I think the Gambia is a great example. In Niger, there are examples. There's many examples where we can see this. It's the same with the African Risk Capacity that has these multi-sectoral technical working groups that many of you will be familiar with. So really, it's something I think that we cannot emphasize enough, because often the reflex is to focus only on the technical, but the political and the collaboration across sectors, in our experience, is often just as important. I think, so I'll leave it here. Thank you so much again for giving us the opportunity also to contribute, and thank you to the organizers and the great contribution today.
Thank you very much, Felix, and thank you once again to all our presenters today for these very insightful perspectives, and of course to all of you for attending this session. I know, unfortunately, we were not able to answer all the questions, but again, we've taken note of them. If you have further questions, comments, or suggestions for further events or further exchange opportunities, please let us know through the survey. You can access it through this QR code that you now see, and we look forward to seeing you next time. Have a very pleasant rest of your day, and see you soon.
Thank you.
Thank you.
Thank you.
Thank you, everyone.
Thank you.